So like I mentioned, quite a number of results last week, and so we are going into what some people are calling a kind of a quiet period in the market. And the big question is, where are the catalysts, where are the risks going forward? Where do you see this market going and why?
I think that we've seen a very strong performance for 2012 relative to where some analysts expected the market to trade, and I think
including you, I remember. I mean, you thought it was going to be flat, but of course.
And I think a lot of that has been driven by a couple of things. First, the emergence of the market makers did create a lot of flip for the market. The fact that you've been able to expand the price for the market making stocks to a 10% band rather than a 5% band meant that you were able to attract a bit more from the institutional side, not necessarily local institutional, but even from the offshore institutional clients back into the market. So there's been that level of positive drive for the market. And then, of course, we've also seen very strong numbers, not just from the banks this time around, but even from some of the large conglomerates, the Nigerian breweries, the Guinnesses of this world. And I think that what we've seen in 2012 is the market reacting to that positive news. Even though there's still that strong overhang over the market from the risk side, I still continue to pick a few things that are significant risks to the market. One is the currency. Right. The currency has been able to hold steady for 2012. That is dependent on oil prices remaining where they are.
I've seen some pressure there recently.
And we started to see pressure on oil prices. That is dependent on what happens in the U.S. tomorrow. Because I think that if we see, say, a Republican win, there would be a period of uncertainty globally because no one knows exactly what the Republican story is. The story during the elections have been attack the Democrats rather than give people an alternative. So for me, there are certain risks that one has to be conscious of, and you have to put that into perspective in looking at where you see the market going forward. One of the other issues is, even from the local point of view, we're seeing significant pressure on the oil and gas space. Production has been shut-in, several shut-ins have been announced in the last three to 6 months. On the downstream
some of it
space,
linked to the flood.
Yeah, some of it linked to the flood. On the downstream side, there's also a lot of pressure. Right. Product supply generally across the market has reduced dramatically, and demand for products as well has suffered as a result of the floods as well as other cyclical factors. So I think that yes, whilst the fundamental story for the Nigerian market appears to have strengthened in the last 12 months, there's still those certain risks that you have to put at the back of your mind from an investment perspective.
And all that said, where you think the market is likely to go?
I think
it's difficult to call short term, but
short term, I think that we're going to trade very sideways. I don't see us breaking the 27,000 mark in a sustained manner, at least until December and probably January next year, or when people start to position their portfolios for 2013 trading activities. So, but I think that right now, if you are an investor, this is a time to recalibrate your portfolio. Right. Sell those stocks that you've made significant cash on and you feel don't have long-term prospects, and start to position yourself for some of the penny stocks, that no one seems to be paying attention to at the moment.
Let's talk a bit about one of those penny stocks, Wema Bank. It's not a bank that a lot of people write about. In fact, I have struggled to find any research reports on Wema Bank. Nobody seems to be interested in that company. We know that they're a regional player. Yeah. There's a turnaround story there. Some ex-Sky Bank people coming in to change the management, hopefully driving things forward. And we've seen some stability, at least in the numbers we've seen so far. But then your thoughts about playing that stock, especially when you're looking at it trading at just over its nominal value?
I think, Wole, we've got to go back from a policy point of view. And for me, this is one of the policy flaws from the central bank, introducing the regional banks in a market that is significantly underbanked. And I would explain what there seems to be a bit of, you should encourage regional banks because we're significantly underbanked. But you also have to realize that the economy is coming out of a crisis. And with the economy coming out of a crisis, people who are looking for a place to save their money are looking for stability. So look at the numbers, very clear. First Bank grew its deposits in 12 months by 40%. Every other bank, save for one or two others, probably did 3-4% growth in deposit numbers. Some banks, even tier 1 banks, actually saw their deposit numbers actually drop. So the reality is that the flight to safety that we're seeing in the market is real. And banks like Wema Bank are going to obviously remain peripheral players, even within the Southwest and the South-South, which is where they've focused their attention on, because they're competing in those markets with very well-established banks. So if you were trying to do a syndication, say for an oil and gas transaction, it's unlikely that the Wema Bank will show up in your list of banks to contact, simply because you're looking at the size of their balance sheet, the ability to be able to actually understand and price the risk properly without any with due respect to their capabilities. But the reality is that if you're not operating at that scale on a long-term basis, the likelihood is that you're going to lose those skills.
Always lose out.
Yeah, you would lose out on the skills from that point of view. So I think that the scale story is one that is going to be missing from a Wema Bank, and time will tell whether the strategy that the management has adopted to be a regional player in a market that is dominated, by 6, 7 really very large banks is one that we would like to see the numbers. I haven't seen any numbers from Wema Bank from the 2011 numbers, so, but the expectation is that even if the bank doesn't lose money as a result of the excellent skills that the guys who are running the bank have today, and they've been able to bring in some very stringent cutting measures, shut down a couple of non-profit making branches and stuff like that. But that's the easy part of their work. The difficult part is competing with the bigger guys in the market.